Hi everyone, I'm Kyle Bechet, and this is the AAF Exchange, a podcast from the American Action Forum, where experts provide clear, data-driven insights into today's economic and domestic policy issues. Welcome, and thank you for tuning in. On this episode of the AAF Exchange, the Federal Reserve's strategy for the remainder of 2024, and a deep dive into the U.S. antitrust enforcement policies. Joining us to discuss all of this is AAF President Douglas Holtz-Eakin, Director of Technology and Innovation Policy Jeff Westling, and Director of Competition Policy Fred Ashton. So first up is Doug. Thanks for joining us.
My pleasure as always.
So here we go, episode 149. Tell us what's on your mind.
Wow. What's on my mind is the Congressional Budget Office, which on Tuesday put out its updated projections for the economic and budget outlook. And the revision to the current year deficit was $400 billion between February and June. That's stunning. It's a very big revision. And it's, it's student loans and the things that you've heard so much about. But the real problem is that we have expanding deficits when we're essentially at full employment, which is just a macroeconomic no-no. Mm-hmm. It makes it much harder for the Fed to get back to 2%. This is, pushing the other direction. And past the current year problems, we have just an enormous unsustainable trajectory. And, I see no genuine recognition of the danger that we're in.
Yeah, I feel like sometimes we sound like a broken record on this podcast, but it's an important broken record to be when it comes to long-term budget outlook here. I mean, I think Jordan's piece, I think, talked about this a little bit, and
she's a great for the listeners. Jordan Herring has a great piece on the CBO document on our website. It's just, the trouble is, it's just miserable everywhere you look. I mean, there's no good news in there.
Yeah, well, it's certainly something we wish we would hear more about on with the election coming up, but it doesn't even seem like we're going to get anything there. So, I mean, something has to give at some point.
Yeah, no question. The politics have to change. We have to deal with this.
Right. Speaking of the Fed's job,
yes.
Let's take. We just had the June meeting. They changed. We've seen a lot of inflation data recently. They changed how much they're going to cut in the upcoming year. So I just want to, I want to give an overview of what we could expect for the rest, their intent for the rest of 2024.
So the Fed has two things going on that they're watching, in my opinion. Number one, they're watching the economy and inflation, obviously. Number two, they're watching the clock and the election. Mm-hmm. They really do not want to be perceived as affecting the election in any way. Cutting, as you approach the election, bad news, stuff like that. So what do you do if it's January, February, you had a great year in 2023, inflation's coming down, and you look like you might be able to ease? You lay the predicate that easing is coming so that when it happens later in the year, it's not because of the election, it's because you had a plan and you're just following through on it. That's, I think, why we got these sort of three-cut kind of outlooks. Now, they've got an economy that's not disinflating as fast as they thought. It's been difficult to get the last stuff. They don't want to have people thinking they're still going to have three cuts, so they now got it down to one cut, which means after the election. And so now I think they've got it exactly right. They can preemptively ease after the election and hopefully get the soft landing, or if conditions merit it, if conditions on the ground go sufficiently south, they can cut. Because then it's not about the election. It's because conditions on the ground are really bad. We get, a big spike in UI claims or something like that.
Right.
And we've had weak data. Mm-hmm. We just looked at the data for this week. It is all bad. The best news was UI claims were flat. So I remain concerned about the outlook.
Yeah. So you really think that the only way they cut before is if we get some UI numbers jump
dramatically. Yeah. You have to get a real big recession flag, right? So personal consumption expenditures come out next week, right? Suppose, shockingly, real personal consumption expenditures could go down 5% or something. Well, that would do it. Right? They'd be like, okay.
Yeah.
Well, we have a big problem in the household sector. We got to do something.
Do you ever remember this playing having to deal with the politics in the way the Fed has to deal with it in this election?
It's always been true. Now, it hasn't always been true that coming out of a pandemic and inflation we haven't seen in 40 years. They've had an election coming up. That's what's different. The backdrop. But every time they're going through an election season, they're worrying about this. If you roll the clock back to, say, 2010, among the things that Bernanke did at that time is they did the quantitative easing, buying the bonds.
Yeah.
And he announced the quantitative easing in August at the Jackson Hole meeting, and they began in the middle of the election. And the Republicans just thought this was the Fed helping out by buying Obama's debt.
Yeah.
And they were enraged by it. And that wasn't true at all. But the Fed learned a lesson from that, which is you have to lay the predicate for something like that. You can't surprise.
Right. So, I mean, okay, speaking of quantitative easing, we talk a lot about, the rates and all of those things. What talk us through what that lever is for them.
So the quantitative easing this time around was the Fed goes out and buys $90 billion worth of securities every month.
Yeah.
Figuratively prints $90 billion in cash, buys $60 billion in treasuries, $30 billion in mortgage-backed securities. Footnote, they've never explained why. Why 60-30? Who knows? And in the process, dump a ton of cash into financial markets, lots of liquidity, and run up the Fed balance sheet by $5 trillion. Now they're trying to reversing it. They were taking out $95 billion a month. Again, they were taking out 35 in MBS and 60 in treasuries. And then recently they announced they're going from 60 to 35 on treasuries. So they're slowing down the quantitative tightening. They've made no change to that. They've never again explained why 35 instead of 30 with MBS. Why did this time they ease on the sort of treasury side and not both? So that remains a policy that's shrouded in mystery, to be honest. And we don't really know how it's working. There's a dissertation in there for some future enterprising economist about what's the equivalent of $100 billion coming off the balance sheet or $1 trillion coming off the balance sheet. Is that 25 basis points? Is that 50? We don't know. We really don't know. It's getting tighter, but how much?
Sounds like a job for a future economist to look at those numbers.
And a future podcast to discuss.
Yeah, exactly.
We will read the dissertation.
We will talk about it in this podcast if somebody does it out there. I guarantee that. All right. That was all I had on the Fed today, but I'm not going to let you leave without doing a trivia question.
Okay.
I was going to do one on CBO, but you already answered it.
I might get it right.
Yeah, so you already answered it. So
I'm
gonna change and make you do regulations because we haven't talked about that enough.
Yeah, no, we haven't.
Since January 1, the federal government has published rules that imposed 1.23 trillion in total net costs, and how many million hours in net annual paperwork has the burden increased?
300 million.
43.2 million.
Dead on.
Yeah, almost there.
I never pay attention to paperwork errors. Don't tell Goldbeck.
Yeah. It's an important one to pay attention to because I think it's the one that a lot of people don't pick up on, which is why I chose to go that way this time.
So the interesting thing is he does take the time to monetize it, to say, what do you have to pay people to do those paperwork hours? And those are big numbers.
Yeah.
When you look at it from that perspective.
Yeah. So it's an interesting thing, and it just again I think highlights the amount. I don't even know what adjective to use here. The monstrous amount of regulations out of this administration.
The capability of my understanding.
Yeah.
I never thought you could do that much, 1.2 trillion, in a couple of months of 1 year. I just didn't. But
yeah.
These are overachievers. What can I tell you?
Well, Doug, on that note, thanks for joining us.
Thank you.
Let's turn to AAF's Jeff Westling and Fred Ashton to talk about the big picture on U.S. antitrust enforcement. Welcome back to both of you.
Thank you.
So
Thank you, Kyle.
Instead, I think we should just throw this out and start talking about our golf games yesterday. That seems like a much better use of our time.
I agree.
Our
US Open recap.
Our last podcast on Live versus PGA merger that the three of us were on the same podcast for, I think did far better than anything we can talk about today.
I mean, it was a great podcast, and who doesn't like to talk golf?
There'll be an update at some point.
I hesitate. I think I've sufficiently talked about the Celtics enough, so we shouldn't have to talk about that.
Move on.
Thank goodness.
This is the first day I haven't worn green in like 4 days.
You wore green yesterday.
I know.
It's not Celtics green. It's still green, Kyle.
All right, let's talk about what we actually came here to talk about. Jeff, we'll start with you. You recently wrote an excellent insight on the Department of Justice's antitrust cases. So I think it's good to just start with, what's actually going on out there. Give us a brief overview of those cases.
Yeah, so the paper, it covers the DOJ and the FTC's cases against the big tech companies. And what I'm focused on are the cases charging monopolization of markets, essentially. So it's a Section 2 Sherman Act, Section 5 FTC Act cases. So both agencies are bringing a lot of cases right now, and we're seeing it a lot in the tech space, especially. And we've got two Google cases, which are both moving pretty rapidly. One is targeting Google search, alleging essentially that Google's got a monopoly in the online search market, and they kind of have a generally broad definition of what that means. And essentially, they're able to extract monopoly rents by saying, if you want good placement, if you want anything, you have to use our search, and you kind of have to go through us. That case has already been argued. We're just kind of waiting on a decision. They also have another case for the ad tech side of the business. So when you want to advertise on Google, or if you want to sell ad space because you're a website, all of these products all use Google ad tech equipment. So there's a lot of concerns from the DOJ on both fronts. Both of these cases are moving quickly. Like I said, the Google search case has already been tried. The ad tech case is moving very rapidly, even though it was just filed, I think, last year. And then there's also the Apple lawsuit, essentially saying that they've monopolized the smartphone market, which is a little bit weird. I think most of the time when we think of Apple antitrust cases, we're looking at App Store issues, and we've seen private litigation against Apple on that front, but the DOJ, I believe it's DOJ, it might be FTC, decided to go after the smartphones generally, and that's obviously a tricky market to go after, just because there's so much competition there, and it's hard to say like Apple actually has monopoly in that market. But that case is moving a lot slower. I think it's going to be a few years before that's decided. We also have a Meta case that's been around for a long time, which is alleging that Meta has monopolized social media by buying Instagram and WhatsApp, which, for those who don't follow antitrust, the Section 2 Sherman Act claims, the monopolization claims, they're pretty tricky to bring. You need to show anti-competitive conduct. You need to show monopoly power. The smart thing to do, if you really think that the Instagram application, WhatsApp acquisition was problematic, you would have blocked the merger at the outset. They didn't do that. The agencies were like, no, this is competitive. Now they're trying to come back in and say these are actually anti-competitive. You have monopoly power. You've been anti-competitive by buying these services, and that case is just an interesting theory. And we've seen a lot of these kind of interesting theory cases. And finally, we've got an Amazon case as well. That one's, again, moving a little slowly, but I won't spend too much time there. But we've got the big picture is we've got a lot of antitrust cases going after the big tech companies, and it's just a small subset of a larger trend.
Yeah.
There's a lot of different moves by the agencies on a lot of different fronts, mergers, Section 1 claims, which is multi-firm conduct, and obviously Fred's written some great stuff in a lot of these aspects, but it's interesting to see just how much activity the Biden administration and the Trump administration, for their part, I believe the first Google case was brought under the Trump administration. So it's not just the Biden administration who's been kind of moving in this direction, but one of the common trends is we're seeing that these cases have very broad market definitions and really interesting theories of anti-competitive conduct that I would argue for a lot of these are very pro-consumer and they're very pro-competitive. What they're doing is they're improving their products and services, and the rivals are having to keep up, and that's a net win for the economy.
Yeah, I mean, you, like you said, you focused a lot on, in your paper, you focused, in general, you focused just mostly on the tech side of things. Fred, you've looked at some of the, the grocery store merger came to mind. I know there's a few, I think you wrote on the airline merger stuff as well. So, yeah, I mean, and then you also had this great op-ed in The Hill recently talking about, the broader implications of some of this stuff, about how the Biden administration is really using the antitrust enforcement to impact, industrial policy in a large way. So talk us through the big picture here.
So administrations forever have used various measures of industrial policy, whether it be tariffs, quotas, things like that, to really elevate politically preferred industries. But the Biden administration has started to use increased antitrust enforcement to conduct industrial policy. And what that means is they're picking winners and losers and targeting large firms mostly because of their size. And the problem with that is, by shifting that focus, the antitrust agencies are risking higher prices, fewer choices, and decreased innovation, which is exactly what they're supposed to be protecting. They've changed their merger policies. They've changed some of their internal procedures with respect to early termination that was designed to get competitively benign merger agreements to pass through the agencies quickly. And they're now going to be changing their rules governing the Hart-Scott-Rodino Act, which will increase the costs on proposed mergers. And it's really all designed to quell merger activity and prevent larger firms from becoming larger.
Yeah. Yeah, it really seems like this is part. Like, I mean, I think your piece really outlined how this is part of their larger scheme. Policy objectives with, going after big is bad and just trying to, manipulate the market in the way they wanted to. And one of the things you noted, I think you just were mentioning there was, the FTC and the DOJ changed their merger guidelines with all this. So just, can you elaborate on that and how that fits into this?
The merger guidelines, the current version, focuses on market concentration rather than the competitive outcomes of a merger and consumers and the effect it has on consumers. Market concentration has very little to do with any competitive outcome, which is why the agencies abandoned this model 50 years ago. Their focus now, or in the past 50 years, has been, does a merger harm the competitive process? Does it raise prices? Will it lower output? And the agencies now really are just focused on, does a firm become larger and have a larger share of the market? A larger share of the market does not indicate market power. And we've seen that in a lot of their merger investigations that have been blocked by the courts. And we have a few now in Albertsons and Kroger where they become a large competitor, but it doesn't mean they'll have market power and able to raise prices. They compete with companies like Walmart, Costco, Aldi, which the FTC says they really don't. Mm-hmm. Those are not supermarkets. So back to what Jeff said, some of their market definitions are a little questionable.
Yeah.
And if I could jump in there, also, the other kind of key aspect of the merger guidelines is that they're supposed to be a document and a reference for businesses to understand what kind of mergers are the FTC and the DOJ, what are they going to go after? What are they going to try to block? And I think when you had it tied more to competitive effects, there were a lot of different kind of behaviors and different kind of markets that they could say, these are the kind of things we're worried about, these are the kind of things we're not. It gave a little bit of guidance to the business community, and it's obviously not perfect, but it's a helpful resource. The new kind of focus just on concentration, it's not really clear what will raise scrutiny, because every merger inherently is going to, make a business bigger. Like that's just like part of a merger. So by kind of going away from what they've done in the past, it's also more confusing to businesses, and it's adding more costs for these mergers and putting more transaction costs in place. So it's kind of dissuading firms from merging in the first place, and that isn't necessarily a good thing. I know a lot of folks in that camp want to stop more mergers, but there's a lot of reasons that mergers can benefit competition writ large, and it's just kind of an interesting part of this is that these guidelines are supposed to kind of help firms understand what is and what isn't okay, and we're kind of getting the exact opposite.
I'm gonna go a little off script here, but have any of these claims been successful to date? Have they like what's their kind of what have the courts said about some of this stuff?
The agencies have lost a number of court cases, but the ones they've won have been the consumer-focused challenges. Yeah. When you think, or the consumer welfare standard sort of challenges, when you think of the Simon & Schuster Penguin Random House case the DOJ brought, that was a buyer and supplier case where the now merged firm would have market power to demand essentially lower payments to authors. And that's your standard consumer welfare theory. Mm-hmm. You could even make the argument in JetBlue and Spirit that was the same sort of thing. Some of the other cases that they've lost have mostly been in tech.
Yeah, they brought a lot of these cases, and they lose a lot of the time because they just don't have these theories that are grounded in current law. But what they do have sometimes is a theory that maybe a market definition should include, something that's not actually a market yet. Like the Meta Within case was an interesting one, and if I remember correctly, they win a little bit in terms of like, the judge might say, well, we accept this market definition, you don't show any anti-competitive conduct, or vice versa. And you can take those little nuggets in a decision and use that going forward. So they aren't winning a lot of cases, and I definitely think they're kind of hurting their credibility. But there is a little bit in there where the agency can say, look, we got this line in a decision that actually helps us in the long run, and so we can bring another case that's just fully diving into that aspect of it. So a lot of these cases aren't necessarily designed to be slam dunk winners. They're just trying to see how far we can kind of push the courts, and,
Gotcha.
and the risk they run is the courts pushing back.
Yeah. Because I do remember back to when I think your event that you had here, where one of the panelists was talking about how they're bringing all these cases and it's kind of hurting their precedent a little bit. So I wanted to that sort of stuck with me a little bit.
That's always the risk, but I think Chair Khan at the FTC isn't overly concerned, because she will then say the antitrust laws need to be changed. And she'll go to Congress to try to have those changed in her favor. Is there appetite in Congress for that? I don't think so.
Yeah, we'll get to Congress in a second. But I do want to get to the one other piece of legislation that comes up a lot, and I know, Fred, you write about this quite a bit, is the Robinson-Patman Act. What is this, and why is it important?
The Robinson-Patman Act is a Depression-era law that prevents price discrimination and discounting of like commodities to different buyers. And it was really targeted against the rise of chain stores, specifically A&P, which no longer exists. Because the little guys couldn't get the same price that A&P was getting by bulk, consistent purchases directly from the suppliers. A&P innovatively cut out the middleman and passed those prices on to consumers. So for the last 50 years, the agencies have not brought many cases. I think the last case was in 2000. And they've pushed back against using it because it has the outcome is anti-consumer. It tends to raise prices, whereas the chain store sales can successfully buy large quantities at very low prices and pass that on to the consumer.
And it's kind of interesting too, just because, as Fred said, this is a Depression-era law. There's a lot of that kind of thing in antitrust, where there's cases that exist from the 20s and 30s that are still good law, like they've never been overturned, and they still have that kind of old big is bad mindset to them. So we're seeing a lot of that with the Robinson-Patman Act at the FTC. We're seeing some of these cases that they cite saying this is actually what the law says, and they're not entirely wrong. And so that's why it's an interesting thing to follow, because there is some precedent that they are citing to that is still good precedent, and it's not where the courts have gone in the last 50 years, but it still exists, and we can't just ignore it outright. Like Robinson-Patman Act is still a law.
They're not wrong, but they're very selective.
Yes.
And that's part of the problem.
Interesting. Which would beg the question is, where's Congress in all this? What could they do? Where might they take a role in antitrust enforcement policy making, especially given with how Fred, you just outlined how Lena Khan, the chair of the is pushing them to do all these things, and then if the courts don't do what they want, they'll say Congress needs to change the law. So what could Congress do?
Well, interestingly enough, most of the focus antitrust-wise on the Hill, at least recently, has been on big tech. It's not necessarily a big overhaul. We saw one bill that was interesting, which would have made like one agency be in charge of antitrust, I think it was the DOJ in that bill, but there'd been a talk for a while about merging those into one. But most of the focus is on the big tech industry, and there's two kind of focuses right now. One is on the app stores, where they'll have the Open App Markets Act, which would essentially require firms like Apple to open up their iPhones to competitors to third-party app stores and kind of open that. And remember, at the beginning, I talked a little bit about it was weird that they're going after the smartphone. Open App Markets Act is going after the app stores, which I think is where more of the scrutiny has been. But interestingly enough, the American Innovation Choice Online Act, which is a little bit bigger, in last couple weeks we've saw rumblings that this bill's coming back. There was a big push in the last Congress to get this through. Essentially, it would require firms to open up their services and not favor their own products. It's basically an big tech bill for Google can't force you to use Google Maps if you're on the Google search. You can't embed that because it's advantaging its own products, even though that could benefit consumers. It stalled out last Congress. We didn't see much action, and I kind of doubt we'll see any this Congress just because it's so late in the season. But what it indicates to me is that depending on the administration, we might see that renewed push in the next Congress and really see some focus there again, trying to go after some of these companies. And it's important to remember a lot of the bills that we're looking at have already been enacted in law in Europe and other jurisdictions. So these aren't like crazy ideas that could never happen. There is some momentum on the Hill, and I think that they would probably be bad bills, and they'd probably harm consumers, harm competition generally more than they would help. But there's definitely something there that we should be paying attention to.
Yeah, and as you mentioned, a lot of this stuff has been already put into European law that they're looking at, and I think it would be helpful for policymakers to look at what's happening in those markets and say, okay, is this working for them, and should we?
Not a lot of big tech companies in Europe, are there?
Yeah, exactly. Fred, any thoughts?
We've seen the Democrat Party really embrace a lot of these laws, but there are allies on the populist right, and I believe it was the Wall Street Journal labeled them conservatives, and they tend to be that populist segment of the Republican Party that believes in industrial policy and are very wary of the power big tech has. But rather than legislating, which is their job, they've been deferring to the FTC and the Department of Justice to sort of do their dirty work and use antitrust policy as the way to do it. And that's unfortunately not fortunately that's not what antitrust policy is supposed to do.
Well, thank you both for coming on and talking about this. It'll be interesting to see if any of this, how this comes up on the campaign and how it's talked about over the next couple of months, and then what the next administration might continue doing on any of these fronts. So I'm sure we'll have you both on to talk about any as this continues to develop and play out over the next couple of years.
Excellent.
Thank you, Kyle.
Thank you, Kyle.
I hope you enjoyed this conversation. Tune back in for our next episode, where our experts will provide clear, data-driven insights into today's economic and domestic issues. I'd also encourage you to check out any of the links in our show notes, and also follow us on social media to learn more about AAF. Don't forget to subscribe on iTunes, Spotify, or Google Play.